1 o'clock. We'll wait a few minutes to see, to let a few other folks join in. So just want to let everybody know that. Good afternoon. I'm Max Maximowski from the OBIC Bioproduct Innovation Center. Thank you for joining the OBIC Bioproduct Network's latest presentation as part of our ongoing Bioproducts Commercialization webinar series. Today's webinar will cover financial tools for the bioproducts industry. We are excited to have two leaders in the field presenting to us today. Unfortunately, our planned third speaker on the topic of risk management insurance was a last-minute cancellation. Before we start the program, let me highlight two quick logistical issues. First, if you have not already done so, Connect is on mute, except for the speakers, to reduce audio interference and feedback. Second, if you'd like to ask a question of our speakers, we'll have a few minutes of Q&A after the presentation are completed. If you think of your question and want to submit it to me directly, you can use the chat box on the right-hand side of the screen, or email to max@maximumcq.com, and we'll bring those questions up at the end of the presentation. And with that, let us begin our program by introducing our first speaker of the afternoon, Dave McCann, business leader with the Natural Capital Investment Fund in Parkersburg, West Virginia. Dave was hired in January 2011 and is based, as I said, in Parkersburg. He has primary responsibility for marketing, deal origination, underwriting, and due diligence for NCIF's agricultural-related loan program. Dave brings over 35 years of community and regional bank experience to NCIF. Prior to joining NCIF, Dave was a VP, senior lender with Citizens Bank Company in Ohio. Early in his career, Dave spent 7 years working on a local truck farm and greenhouse operation near Akron, Ohio. There, he learned much about vegetable production, along with wholesale and direct retail marketing strategies for fresh market produce, including the on-farm market. Although Dave has done commercial lending for many years, his long-term forte has been making farm loans and agribusiness loans with an emphasis on farm mortgage loans in the Midwest. As such, he's had experience lending to most of the commodity types in a multi-state region. Over the years, Dave has been able to develop relationships with a wide variety of agricultural funders, which remain useful in his new role at NCIF. Dave earned a BS degree in agriculture from The Ohio State University and currently lives on his nephew's farm in southeast Ohio, where they have a small Angus cow-calf rotational grazing operation. Dave, I'll turn it over to you.
Well, thank you very much. It's a pleasure to be here, and I appreciate the opportunity to tell our story to the audience today. I guess let's go ahead and start. Next, there we go. CDFI is bringing capital to new and growing business. Natural Capital Investment Fund is about 12 years old. It works in the Central Appalachian region. The CDFI stands for Certified Development Financial Institution. We get our lending authority from the Treasury. We get our funding from foundations, donations, and from our parent company, called the Conservation Fund, which is a national conservation real estate type company. My particular territory is northern central West Virginia, northeastern Kentucky, and up till recently it was just Appalachian Ohio, but now I can cover pretty much anywhere in Ohio. So that's been a change. I last visited with Max. Next slide. NCIF is intermediary to provide loans and capacity building assistance. By that I mean we don't do grants. We do operating or working capital type loans, equipment loans, real estate and facility type loans. So we have to underwrite them just like any other institution with a heavy emphasis on repayment capacity. Because they are loans, the money has to come back. Some of the foundations used to give us grant money, but nowadays they've gone to what they call a PRI, or program-related investments, which means at the end of the period they get that money back with some interest too. So we're a non-traditional lender, so in many ways we're a little bit more forgiving on some of the characteristics of loan structure and approval, although our investment committee is made up of a number of bankers, CPAs, and CFOs, so they have a great understanding of business credit, commercial credit. But many times when somebody cannot get a traditional bank loan or savings and loan type loan, many times we can help, either with a direct loan or in some cases, many times we'll work jointly with a bank or an economic development authority or someone of that nature. We're a great collaborator. We like doing that because we can leverage our dollars even further that way too. So we like to focus on entrepreneurs and companies that create jobs, eliminate waste, and use natural resources wisely. They call it the triple bottom line, social, economic, and environmental. So this touches a lot of industries beyond just basic agriculture and forestry. We get involved a lot in energy efficiency and renewable energies, and then as it applies to this group, the biosciences, the biomass, the new products that are coming out using crops and crop derivatives and so forth. So we feel that this group fits up real well with what we're trying to accomplish. I guess it shows there the amount of money we've deployed. The advisory services are more for the states where we have grant money for that, West Virginia in particular. What we do there is we help people with accounting services, marketing services, engineering services, where we hire people to come in and help them put together the financials and future financial reporting systems, with marketing if they need a website and marketing materials, with engineering. Somebody buys a facility, is going to build a facility, would need flow process design, things of that nature. We help engineers to help provide those types of service, as well as some legal service when people are trying to decide which business legal structure or owner structure to have. Many times we help by hiring attorneys to do that type of work. Assets under management, $15 million. Compared to a lot of places, that it isn't a lot, but you have to understand that we only started 12 years ago when we started from scratch, and a lot of that has been grant type money. So it's taken a while to get to this level. It seems to be speeding up more, and as such, our company is adding staff and we're attracting more funds. That part's going real well. Next slide, please. This is a nice schematic of where we're putting our money, our loans, into these various categories. One is just trying to reach the general community type lender. So a lot of these are going to be more out in the country types of businesses, farms or forestry, ecotourism type type businesses or firms. That fits our mission real well. We also like to kind of keep track so we don't get overextended or too concentrated in any one particular area. It's part of our loan policy and loan administration. You see the recycled and waste reduction is about 14%. We're hoping to be able to, that and the energy efficiency and renewables, we generally would like to increase those a lot. And then the value chain in agriculture and food and related products. So it just gives you an idea where the money's been going to in some of those segments where we'd like to expand a little bit more too. Next slide, please. Just a couple of example companies where we've made loans and give you a little bit of an idea of some of the diversity. Now, some of these I have not done a lot of new business in Ohio yet. I've done a little. We're probably more concentrated in West Virginia, Carolina at this point. So, but you can see some of the different things that we're doing there. Next slide, please. And here's a nice graph that points out what I was talking about earlier, that we're non-traditional. So this gives you an idea of the risk. We risk rate every deal. So for one thing, for approval, but also for pricing. A lot of our loans land in the 4 to 7% range. So even though it might be a younger company or a little bit more risk, we're charging a little bit more than a commercial bank, but it certainly isn't, very high interest. Or you're also able to keep your company, so with like traditional venture capital type people. So we are a nonprofit, so we're really not trying to make a lot of money, but we have to make enough money to support, our business operations, our staff, and so forth. And as such, we're a little bit different approach to the market and to these deals as compared to traditional type lenders. Next slide, please. This is sort of self-evident, but a lot of the people that we work with are great business people, but they're not the best accountants. And so, and a lot of try to get them that kind of a help. But to give you some idea of the types of things that we ask for when we're looking at a project. So we need financials. We need to know historically how they performed. If it's going to be a newer company, projections are pretty crucial, and feasibility studies, things of that nature. We're trying to deal with people that are either already commercialized or going to be commercialized. If they have a historical track record, that really helps. We generally don't get into financing like pre-seed companies or research and development or pilot runs. It's generally once they become commercialized or going to be commercial runs, and first and second expansions is probably where we fit into the market best. And we do consider the people or the owners or the principals. That's an important part of how we look at things, because many times balance sheet wise and so forth, things might not be as strong as you normally would like. So many times we have to really rely on the project itself and the people that are running it. Next slide, please. Finding your local CDFI. Here's a couple of suggestions where you might look up other CDFIs in the state or in the country. Fortunately, we have a few. Some are based up in the northeastern part of the state. Many times, though, they have a low threshold for loan volume. In other words, it might be 25 or 50 or 100,000. We can actually go up to a $500,000 loan size these days, And if we can get a USDA business and industry guarantee, we can go up to $2.5 million. I think Finance Fund out of Columbus would be one CDFI that can match or maybe even exceed the volume thresholds that we have, but I don't think they have as deep an understanding of some of the markets as what we would have. But they'd be a good example of people we would like to collaborate with in putting together deals. Next slide. So here's our contact information, and here's my contact information. A little bit about Shepherdstown, West Virginia. That's where our home office is for the subsidiary. The Conservation Fund is actually out of Arlington, Virginia. We have another subsidiary called Freshwater Institute, where they study and research land-based fish farming, and they have a facility there where they're studying trout and salmon, taking them from eggs and fry up to finished vegetable fish within 2 years at about 12 pounds. So that's where my boss, Martin Jenkins, is at, and that's where all the loan administration, all that sort of thing goes on. As far as my contact information, you've got my email and the office and the cell phone numbers. Generally, email is the best way to contact because I'm in and out of the office an awful lot, and you'd think, well, the cell phone would work, but a lot of the places where I go, cell phones don't work. Some of them pretty remote locations. Consequently, I don't always get a signal. So, and I check email all the time, so that would probably be the best way to contact us. So I guess I'll open it up for questions whenever it's time.
One quick question, Dave, and I think this is, you and I have talked about this in the past, is what area do you cover? You mentioned Appalachia, now getting into Ohio. What is the zone that you cover with the NCIF?
Okay, I'm covering all of Ohio, northeastern Kentucky, and the northern half of West Virginia.
Okay.
Now, since we've talked, we are opening up western Pennsylvania and western Maryland as well, because I think you and I talked about that there might be some collaborations with you folks going on over in some of those states.
Right. Okay.
We just started a logging initiative, and I'm going to be looking at some logging deals over in North Pennsylvania, and we just did our first loan to a organic goat creamery in Maryland, so we're starting to open those states up as well.
Okay.
If you get into other states, we have other reps. We just hired a new person for western North Carolina.
Okay. Very good. Thank you, Dave. Appreciate it.
Thank you.
Now I'd like to introduce our second speaker for the afternoon. It was Matt Davis, the Managing Director at Capital Peak Asset Management. Matt has over 16 years of experience in finance, strategy, energy, and operations. Previously, Matt advised Morgan Stanley's COO as a member of the firm's strategy and execution group, developing and implementing strategic initiatives. In this role, he managed the firm's exit from its U.S. trust business and executed the sale of Morgan Stanley's global oil merchanting business to a company majority owned by a government entity. Additionally, he has developed strategies for risk-weighted asset reduction and stress modeling. Prior to joining Morgan Stanley, Matt worked as an investment banker at Moelis & Company. In that role, he made significant contributions to the development of the firm's public sector business, developing relationships at numerous federal departments and agencies, as well as state and local governments. Matt spent over a decade in the U.S. Navy serving as nuclear submarine officer. Matt also holds a B.S. cum laude in nuclear engineering and engineering physics from Rensselaer Polytechnic Institute. Additionally, he holds an MBA from NYU Stern School of Business. And with that, I will turn it over to Matt.
Thank you for the introduction. as you said, I'm Matt Davis. I'm run business development for Capital Peak Asset Management. Capital Peak Asset Management is a fairly new entity. It was created to do a couple of things. First, to manage the Rural Infrastructure Opportunity Fund. This fund was announced in July of this year by the White House Rural Council. It's a $10 billion fund. Initial commitment of $10 billion from an anchor investor, CoBank, with the intention of raising a second $10 billion from institutional investors. The main target of this fund, as the name would imply, is rural America. And inside of rural America, the fund is targeting investments in critical infrastructure. And when I say critical infrastructure, it's infrastructure that does not include toll roads and toll bridges. It's more proven demand infrastructure, I'll call it. So water, wastewater treatment, broadband, energy generation, transmission, distribution, biomass, bioproducts, solar, renewable technologies, and pretty much anything that you can imagine within the community, including community facilities, rural hospitals, and the like. The fund's anchor investor, CoBank, is part of the Farm Credit System. It's not a FDIC regulated bank. It's regulated by the Farm Credit Administration. It is over 80 years old. It has a long track record of investing in these asset classes. They invest about $22 billion a year in rural America through senior lending. They are second only to the USDA, who invests over $30 billion a year in rural America through loans and loan guarantees. You'll find that the Farm Credit, they're the largest member of the Farm Credit System, and that they are often investors alongside the USDA in projects, and that was one of the genesis. The genesis of the fund was to better collaborate efforts between the Farm Credit System and the USDA in deploying capital optimally from both the government standpoint and from the private sector standpoint. While the USDA has announced the fund and works with the fund, it is not a government program. It's a commercial program. CoBank, as part of the Farm Credit System, is a government-sponsored enterprise. However, it's a for-profit government-sponsored enterprise. The key to it, though, is that it's a cooperative entity. So as a cooperative, its ownership, it doesn't consist of shareholders. It consists of the borrowers themselves. So if you borrow money from CoBank, you essentially become part of the cooperative and part owner of the bank. But being that it's a GSE, it does have a low cost of capital. The other key point to note is that the fund is looking to raise an extra $10 billion from institutional investors. That $10 billion is looked at as new money from a standpoint of institutional investors don't have a large footprint in these asset classes. There's not an easy way for them to get into these sectors for a couple of reasons. One is they just don't have that type of direct investing capability. Their direct investing capabilities, even if they're built out, usually don't cover these asset classes. Typical finance providers here are outside of the USDA and the Farm Credit System are usually commercial banks and community banks. So I think this is a unique avenue for funds to get involved by lending essentially alongside CoBank. One other thing I'll say is that as the fund develops, there is also developing a capability junior capital, subordinated debt, mezzanine, equity investments. That's going to be a little bit out on the horizon. Right now, the senior debt part of the fund is open for business. We're currently looking at projects across the United States, diverse geographically, diverse in size, and diverse in project type. I think that I couldn't really give you an average size, but I'll say projects go from several $1 million up to several $1 billion. So very broad, and like I said, very broad in geography and asset type as well. I think that like I said, bioproducts are one of the areas of focus. You could view this fund, though, as more providing the senior financing for projects that produce a plant or produce a factory or produce, that type of loan, more than you would look at it for a growth equity investment. However, like I said, that'll be changing over time, but not right now. One of the other things I wanted to point out is that our anchor investor is also an investor in what are known as Rural Business Investment Companies, RBICs. Their RBIC is called Advantage Capital. They do growth equity investments in earlier stage companies. The RBIC program is very similar to the SBIC program that the SBA runs. So very similar to the small business investment companies. They do growth equity investments. They have low cost capital from the Small Business Administration that they lend out as equity investments. I should say invest as equity investments. So I think that right now they are open for business, and they would be a good place to go for that type. And I think it's worth having a conversation with us now, but we're further out on the horizon for that type of investment. Regardless of what type of financing you're looking for, since I think over time we'll be providing the full spectrum, in order to have a project considered, the best way to go about it is to go on our website, www.capitalpeak.com with a dash between capital and peak. You'll see a submission form there. You can fill out the submission form and email it back. Within a few days, it should be an actual web portal, but that's in process. The other thing I'd say is you could just reach out to me directly, especially if you just have questions. And that's matthew.davis@capital-peak.com. And I'd be happy to answer any questions on that and provide whatever guidance I can. I think the last thing I'll point out is that with the USDA and other government agencies, our role is, or our goal and role is to try to optimize the capital structure. So there are a lot of government programs, obviously with the USDA through loans, grants, loan guarantees. Where and when relevant, we will try to utilize those programs as part of the financing. And, there will be times where it's the majority of the financing. There will be times where it's not relevant and it doesn't account for any of the financing. So it's very, very project specific. But ideally, through this venture, the government will be able to more target its money to projects that aren't able to be supported by the private sector and essentially maximize the impact of the government's dollar. But I know grants were brought up before. We don't provide grants; it's just senior lending, but we do work, closely with government agencies, including the Department of Energy and USDA, to get assistance, governmental assistance where necessary. So I think that's an overview. I'm not sure where, what type of questions if you have as far as investment types, but I'd be happy to answer any questions.
We have one question. I don't know, Rob, if you want to answer this one directly or you want me to ask it for you. You can, Rob, and ask the question.
I'm muted, Max. I'm muted, Max. I'm sorry.
You're muted? Okay. Go ahead. And if you want to go ahead and ask your question, Rob.
I obviously came off mute to tell you I'm muted.
I know that.
So go ahead and ask it if you would.
Okay. So the question that Rob has is for you, Matt, is the company that you mentioned is currently providing the growth equity funding. I think you said that was Advantage Capital. Is that correct?
That is correct. Advantage Capital.
And what is the best way to reach out to them? Is it through you, or is there contacts directly at Advantage Capital?
I'm sure they have their own contacts, but right now they are a newly formed entity too. I think they have a little bit of a head start on us by a couple of months. But I'd be happy to direct you to them. Like I said, we're both affiliates of the CoBank, and we'd like to see each other's endeavors succeed. So we'd be happy to.
Okay.
Yeah, thank you, gentlemen.
So Rob, I'll get you Matt's email in case you didn't get it when he mentioned it. So.
Okay, thanks.
Great. Good. And Matt, you are just because it's USDA, it is just within the borders of the U.S. You don't do anything internationally, correct?
That's a great point. U.S. and U.S. territories. So the only things outside of the U.S. would be like Puerto Rico, Guam, American Samoa, those areas.
All right. Great. All right. I didn't see any other questions come in, so thank you, Matt, and again, thank you, Dave. Was good having you present those overviews, and what we will do is save the recording of this or the presentations. It'll be up on the OBIC website for future reference, and also to connect to other folks who could not attend the webinar. Let's wrap up here. I'd like to again thank Dave McCann and Matt Davis for presenting this afternoon. We also want to thank all of you who have joined us as participants. This is just a friendly reminder that today is the last day of exhibitor registration for the Bioproducts World Conference and Showcase. To learn more, please visit the website that is shown on the screen at bioproductsworld.org. And if you are not a member of OBIC or our OBIC Bioproduct Network, we encourage you to visit our website to find out more and to download a membership application. Membership to the OBIC Bioproduct Network will ensure your access to great programming opportunities, such as our networking events and annual meeting, and will also help you and your company stay at the forefront of happenings in the bioproducts industry. Again, thank you for participating in our OBIC Bioproduct Network webinar series, and we look forward to having you join us again soon. Thank you all.
Max, before we completely adjourn, I want to make sure we underscore the point that Al Pachala, who is the Chief Executive Officer for Capital Peak Asset Management, will be one of our speakers at the conference, one of our keynote speakers on lunch. So thanks so much.
Thank you much, all.